Okay, good morning, folks, and welcome to Member Stock Chart Request. This is where we review the symbols that our members submit for me to review. Let's kick things off first with a review of the markets. It is at current 5:15 a.m. Eastern Standard Time, and what you're looking at are the Dow Jones futures, which when I went to sleep were down about 1,000 points, and overnight they have turned positive. They've now gone back negative. So volatility still reigns this morning. You have a global sell-off. The rest of the globe playing catch up with our markets. Let's take a look at the NASDAQ futures. They are actually up, but just barely. Now, members, if you're looking for strategy, please go back to last night's market wrap, and I lay out support levels in this market and our strategy for trading the market. If you have any questions, leave a note in the forum. Now, I just got done listening to Fox Business News, not my preferred financial news channel, but you know what, it was just on. So here are the comments that are coming out from their talking heads this morning. With regard to velocity, it came out of nowhere. Really? We've been saying for weeks, it's posted everywhere, that this sell-off was coming. There was no shock here. Let's not play that game. Another talking head, the economy. With regard to the economy, it's strong and getting stronger. No, it's not. The market is a forward-looking indicator. It is telling you it is not. And of course, my all-time favorite, if you have a 1 to 2 year time horizon, this is a great time to buy. What this tells me, what these comments tell me, are these people, these banksters, these talking heads and salesmen on the financial news media, they're clueless. They have no idea why this sell-off is happening. Now, yesterday after the market closed, we saw the XIV, which is an inverse ETF, simply blow up. Literally, it blew up. It closed at $99 per share. It hit a low after hours of $10 per share. So the lesson learned here, folks, is that if you're trading the inverse ETFs, and I do it myself, remember that these things are built on derivatives. I don't want to see anybody losing money. They are built on derivatives, therefore, they can, in fact, blow up. Let's take a look at the dollar. The dollar was behaving strong after hours yesterday. It's pulled back some. We saw a rebound in the euro. The yen held up fairly well. And you may be asking, why does this guy every day pay attention to the dollar so closely? It's because the dollar is a barometer, one of the many that we use here to identify the intent and the probabilities of the Federal Reserve. And for this selling to abate, at some point in time, the Federal Reserve is going to have to scream uncle. And you'll see the markets begin to price in fewer rate hikes in the coming year. And that is going to crush the U.S. dollar. Now, we are looking at and have acted on the precious metals. Now, when you're looking at gold, it just shot up after hours last night. We're up at current $10. I have an alert set up here if we put in a new monthly high. If we put in a new monthly high, folks, we're going a lot higher on gold. We have a strategy set up for trading the gold mining names as well as silver. So for those of you that are looking at old leadership in the stock market for future leadership, you're looking in the wrong area. It's rare that prior leaders come back and act as leaders once again after we head into a massive correction. And that's exactly what we're in. Are we done going down? Maybe. We're going to probe for a bottom right now. But what the market lacks right now is visibility. And that visibility needs to come by the Federal Reserve. We have two Fed governors speaking today. Steve Mnuchin's on Capitol Hill. That's our Treasury Secretary. And all eyes will be on those people. You're seeing commodities, copper, rise. Watch out for commodities. Because once they signal that rate hikes are going to be reduced, to give the all clear for the markets to rebound, you're going to see commodities rip. Oil, not much price action here. The euro is at current breaking out on this 4-hour chart. That is bearish dollar, bullish commodities. Bitcoin, what a mess. We're at current 6,700. I don't think we're done going down here. The yen, it is moving higher, breaking out. Now I want to segue into member stock chart requests, and one of them is the VXX. Let's bring that up. All right, so we pulled back off of yesterday's highs. We're moving higher, but you need to remember where you're at on a weekly basis relative to your upper band of the third standard deviation Bollinger Band. Let's go to a daily chart. You can see that we are leaning into the upper band of the third standard deviation Bollinger Band. This is not your out-of-the-box 2 standard deviation Bollinger Band. This is a modified version. The reason why I have it designed this way is to show me where stocks, in this case an ETN, where they're not supposed to be. You are going to get a pullback. Might it rally further this morning? Sure. But sometime this week, in all probability, you are going to get a pullback. And right now, you are subject to headline risk. What's that headline risk? Anything that is interest rate dovish. All eyes are on the Fed, folks. And once we get that, you're going to see a snapback in this market. It'll probably be short-lived because the markets won't be satisfied with that. Until, of course, we begin to roll out a new QE program. And you may be saying, Bob, you're out of your mind. They just got done with QE3 only a couple of years ago. We have a choice, folks. Either the federal government can cut spending or they can continue or renew monetizing our debt. Now, for those that aren't familiar with what monetization of debt is just think of it this way. You get a credit card bill in, you don't have the cash in the bank, so you use another credit card to pay that bill. In short, it's a Ponzi scheme. But that's our federal government right now. That is our fiscal and monetary policy. Now, you may be saying, Bob, wait a minute. They could cut spending. That would help, right? Sure, it would help our deficits. Longer term, it'll help the economy. But shorter term, it'll be very hard for the economy to digest. And lastly, and most importantly from the eyes of the politicians, the last thing that they want to do is cut spending because that is really hard medicine to swallow. So they would much rather apply pressure to the Federal Reserve to get them to act more stimulatively. And that is the path we are going to take because to them, not in our eyes, but in the politicians' eyes, that is the path of least resistance. Let's get to those other charts. All right, Amazon for Chuck. Chuck, I would not short Amazon right now. We actually booked profits in a short of Amazon yesterday. We rallied off the lows of the period. Actually, I went into the week saying Amazon was my favorite short. We did book a profit on Amazon, but I have to tell you, with the shares of Amazon rebounding yesterday and holding support, it's showing relative strength versus the rest of the market. So it's not a stock I would short at current. I think there's plenty of other game out there to short. We'll be talking about it in our market wrap strategy sessions. So stay tuned for more in terms of stocks that we're looking to short and buy. Because remember, folks, you should have a list being prepared. There are going to be great bargains out there. Get your list together and be prepared to act, please. Now, the VXX, once again, we are ripping through the third standard deviation Bollinger Band. I would book at least half to 2/3 profits here. You're going to get a pullback. Don't fight this. This is unsustainable. Can it move higher? Sure, absolutely it can move higher. But this is a trading vehicle, folks, not an investment. So don't stick around too long, please. And congratulations on your profits. Credit Suisse, the owner of the XIV, that ETF that blew up overnight. This is going to be interesting. It's going to be interesting to see the impact that the blow up has on Credit Suisse and their other leveraged ETFs. And I think we're coming down here to the prior lower band of support, which will coincide with the 200 period moving average. I would not buy Credit Suisse right now. Berkshire Hathaway, the Beach class shares, we have broken right through the lower band of support. We're going to retest probably the 195 level. If that breaks, we're going down to 180. So I would not be a buyer of these shares quite yet. UGAZ, this is for fellow member Kevin. Kevin, I apologize. I skipped over this over the weekend, and I've been meaning to get this done for you. So UGAZ, a bearish key reversal last week, a continuation breakdown this week. We are at support at 62.50 daily chart. Now, we are coming into a range where it's interesting. I think we're probably going to come down here to 59.31, if not $55 per share. It's at that point in time, especially if we hit $55 per share, I would be looking for a bearish key reversal and a recapture of $55 per share. So I see no rush to get involved with this position at current, because at the moment the path of least resistance is to the downside. Let's see how we're trading pre-market. All right, Nat Gas futures, 4-hour chart. No breakout here. We're still in a downtrend. It's trying to break out right now, but we haven't closed this period out yet. We could easily give it back up and head lower. We have our Bollinger Bands, which are tightening. So, Kevin, if you're interested in the UGAZ, just keep posting it on the ticker cloud, and we will continue to review it. And that's it, folks. Let's take a quick look at where the Dow futures are trading at current. We're about the same as where I began this this commentary, at 180, down 178 right now. And the dollar is so critical right now. We are holding support and rallying off of it, gaining some strength. Now, if we break this support level, it's all over for the dollar. But if we break out above this upper band of resistance here in yellow, well, then we're going to see pressure on commodities. That's it for this morning, folks. Everybody have a profitable trading day. Stay small, raise stops, and be well.